Good day, family. It is Pixellap right here, and welcome to this new video, guys. I hope you're happy as you see on the screen that it is written NASDAQ100, and also the thumbnail says it all, and also the title. So, guys, this is the NASDAQ100 market breakdown. So I know many of you all have been waiting for it, guys. Many of you all have been waiting for an index breakdown just to see how Pixellap trades it, or how he makes a breakdown on NASDAQ100. So we are on the day one time frame, guys. Day one time frame on NASDAQ100. So right here we're just going to spot a bit of a day one highs and day one lows, because we do not trade NASDAQ on day one on higher time frame most of the time. So guys, okay, so we can clearly see that this was our previous high on NASDAQ100. Then now this is our new day one high. So we're just going to name it daily high. Then now our daily low is just right over here. This is our daily low, guys. So as you can see, we have our daily highs and our daily low. And as I can see very well over here, we have an inefficiency, guys. We have inefficiency, and we have a very powerful point of interest. We have a very powerful point of interest over here, guys. Very powerful point of interest, as you can see. But another thing, don't forget, guys, we are on the higher time frames. We are on the higher time frames. So something must happen fundamentally. Obviously, something must happen fundamentally, that NASDAQ must come from where it is now to this point to integrate it, because it is the day one time frame, guys. This is the daily time frame. It will take so much pips for NASDAQ to reach this point, for NASDAQ to mitigate this point. But again, we can see that NASDAQ also created an inefficiency. We have an inefficiency onto this point, which gives our, okay, let's just first draw it. Let's just first place it in imbalance. Okay, perfect. So we have our imbalance zone over here, guys, and it got even mitigated. It even got mitigated. But again, I want to let you know about something, guys. As much as we have as much as we have a point of interest on a day one time frame, which means it is a very powerful point, and as much as we have also an imbalance that supports what our FC can do, our point of interest, which means it is much more stronger, but it will take a lot of powers and a lot of pips for NASDAQ to move from where it is to this zone. It will take a lot. I don't want to lie, it will take a lot. And another thing, most of the time markets do not like support, they do not much support the inefficiency, the imbalance. It doesn't mostly support, and we do not place it so that we may be able to capitalize on a trade. We just place it to recognize it, and it also helps to see that, okay, the market must just must come to what, to fill this place. So I won't say that the market won't come to this point. The market can come to this point because it definitely has to fill this imbalance. There is no way that it won't fill this imbalance. It must fill this imbalance. This is the daily imbalance, and this is our daily point of interest. So let's just go to our H4 time frame. Oh, the network. Okay, beautiful charts, beautiful charts. So as you can see, guys, on our H4 time frame, we have our H4 low over here. We have our H4 low over here, then our H4 high is obviously over there. Then we can clearly see, guys, that the point of interest over here has a bit changed because we have an H4 point of interest over here. So okay, let's just give it a purple, and okay, perfect. So we have our point of interest over here, and we have another point of interest over here. We have another point of interest over here. And also inside of between this point of interest, we can see slightly that we have imbalance lying over here, and also we have imbalance lying over here. So what does this mean? This literally means that the market can also break this imbalance and come to fill this imbalance and what support this IFC candle, which is also supporting what the IFC of the daily IFC, to mitigate it onto this level. Then it can shoot up, but yet we do not know. Let's just go to other time frames. Let's just go to our H1 time frame. So if you can zoom very clear on our H1 time frame, you can clearly see that this is our H1 low. Then our high is obviously over there. Okay, so let's just zoom in. We can clearly see that this looks like a mitigation of the imbalance, but actually it might be of this one. No, yes, but this point has retested our imbalance. Yes, yeah, retested our imbalance actually. So let's just look here inside of our H1. So we can see that our H1 over here, I can say without going to other time frames that this was the market collecting liquidity. This both candles, market was collecting liquidity. Over here, it lies in equal high. I can say you'll just see as you go down to other time frames. Here it lies equal highs. I can clearly see them this equal highs, but I want a clearer view on smaller time frames. Let's just take ourselves down to what, to M15 time frame. Perfect. And on M15 time frame, what I've said, it's actually what is happening. We have equal highs. Okay, let's just do this. We have equal highs. And what happened on our equal highs? The market broke our equal highs. So let's just name this equal highs. So you know the rules, guys. You know the rules that when we have an equal high, the market must definitely what? There's liquidity lying over our equal highs, and the market must free this liquidity. So the market actually freed this liquidity, and as it frees the liquidity, it went down. So you know that immediately when it does this, over here we had our what? Equal lows. So this is a great setup that I love to take on when trading institutional. I love this beautiful setup. I love it very much because the FU candle works very well over here. Because if you can look very much clearly, we have a double an equal low over here, and this equal low has what? The liquidity was lying over here, and the market freed the liquidity over here. So let's just give it a name. It's equal lows. So the market has freed the liquidity over here. The market has freed the liquidity over this point, so it went up again. It gave us what? An FE candle, which must be mitigated. Then that's when I have much confidence to take my sell trade on NASDAQ. I have much more confidence on taking my. I have much more confidence. I have much more confidence on taking my trade, guys, over here. So as you can see, the market had a bit of imbalances over here as it went as it was going up. It had imbalances. You can see over this point there's imbalances, so it gives me much confidence that the market must feel this. Obviously it must feel this imbalance, and it must get to my point of interest and mitigate it actually. So I'm looking into taking my trade from this point. So but most of the time, that NASDAQ supports what? NASDAQ supports our 50% levels. So it might be over there on the 50% of my of my IFC candle. So guys, I love this setup. If you can look at most of my case studies, if you can look at my Telegram group, don't forget to join my Telegram group. You can definitely see very much well that I love trades like this. I love trades whereas I love this setup, whereas I get my equal highs and my equal lows, knowing that they must both have the liquidity is below and it's above, and liquidity must be freed, and liquidity of equal low has been freed and of equal highs has been freed, and we have an FE candle. Then we take our trade of the FE candle. This has a much more probability of working out. So I'm looking into taking my trade from this 50% level. And don't forget, this are indices. We can't put our stop losses over here. We can't put it over here. I'll put it a bit over here, my stop loss. So also I'll be taking my take profit. My take profit will be at least on the H4 low. My take profit will definitely at least be on the H4 low until I see better confirmation or until I see something. So this will be a 1:23 risk ratio trade, which is very good, guys, which is very good. And mostly when you trade in NASDAQ, the P value is very high. You're going to make a lot of money. 2,783 pips. This is not child money, guys. This is a lot of money. There's a lot of money, so you better capitalize on this trade. I hope you enjoyed this video, guys. Let's just go to our M5 time frame and see what we can get. Maybe we can have a very clear setup or a clear view of everything. So as I enter this time frame, I can see very good retail channel. We can see an impulsive move over here, and we can see a bit of a continuation channel, which I no longer trade retail trading, but I know the skill never dies, guys. The skill never dies. So this serves as it serves actually as a confirmation. It serves as a confirmation. Let's just zoom in, and you can see very much well that we had a beautiful break over here. We had a very beautiful break, guys. As you can see, we had a very beautiful break over here, and the market is just going up. So I don't think it will reach my 90% level, but it will reach this level. So I want to see something very fast, guys. Okay, something might happen. Another thing that might happen, guys, the trade. Another thing that might happen is that the trade might not trigger over this point, but it might go to our daily high. Then this is when it can go down, or it can support this. It can support my M5 point of interest. It can support my perfect trade, guys. Perfect trade. Guys, you better be looking at NASDAQ. You better be looking at NASDAQ this week. We are going to milk it very much well. So as you can see, we have over here, we have what? Our M15 break. We have our M15 point of interest, and we have our M5 point of interest, and luckily our M5 time frame is on our 50% level right there. And as the trade is going to trigger in, it's going to be on the 50% of the M15 IFC candle. So it gives us more confidence. It just gives us more confidence onto the trade. And we had also, Jesus, oh guys, the setups are very good, guys. We have a small imbalance over here, guys. We have a small imbalance over here. You know, when you understand the market, it's like you be crazy with it, guys. It's like you be crazy. Surely many of you are thinking, what's going on with this guy? But guys, it's just understanding the market. You have that feeling. If you start understanding the market the way I do, or having a better clear view, or knowing how to actually analyze the market, the market, you'll be a bit crazy, because you'll see setups, you'll see how market performs, and a lot of things, guys, actually from the market. As you can see, over at the right point where we want to take our trade, we have a beautiful imbalance. So the market must definitely come and fill this imbalance, guys. There's no way the market won't fill this imbalance. The market must come and fill this imbalance. And right on this side, we have imbalances right here, and the market is trying to fill these imbalances. So we have better confirmation that the market is even gonna reach this point, because this is where the imbalance has started off this area. And we also have another imbalance over here. We have another imbalance over here, guys, which also gives us more confidence that the market must come to these areas and fill up the imbalances, guys, fill up the inefficiency. So this is the analysis of NASDAQ100, guys. This is how I analyze NASDAQ100. One of the methods that I use to analyze NASDAQ100. Please don't forget to give this video a like if you liked it, and if you disliked it, please give it a dislike, and please tell me why you disliked it, so that I will be able to improve onto whatever you see a problem with. And also, guys, don't forget to hit the subscribe button. I mean, guys, it's just free to hit the subscribe button. Free, guys. It's free to hit the subscribe button, and don't forget to share on all the social media platforms, which is also free, guys. And I'm very much sure you don't want this knowledge alone, guys. You want to share it with your friends and family. You want your family members to know it. And yes, guys, this is free setups, free everything. You can see, guys. And I'm happy that you are here, guys. I'm very happy that you are here. God bless you. May you have a blessed, a profitable, and also a productive week ahead. Yes, guys. So I'm not sure if I'm going to upload my trading sessions video tonight, or is it gonna be before the NASDAQ breakdown, or is it gonna be after the NASDAQ breakdown? But I've already recorded it, so if it's after or it's before, you must know that you must watch it, and you'll see that this is the London session, and this is the New York session. This is where it relapsed. So I just want to show you this beautiful entry that we should have taken when the New York session opened and the London session was still in action. So we can clearly see here that we had an order breaker. So we had another block, I mean, guys, we had a point of interest, but this has quite of a big stop loss, but it's not a problem. It's not a problem as long as it's correct. So we take our trade over here. We should have taken our trade over here. Our stop loss just around over here. Yes, just over there. Then we know that we had equal highs, so we knew that the market is going to free the liquidity, take profit on our H1 low. It's how much? 1:5 risk ratio, guys. We would have secured 1:5 risk ratio, and we have more confidence on taking this trade, because you can clearly beautiful see that we had a bit of inequalities over here. We had imbalances, which we knew that the market must come and fill. The knowledge is too much, guys. The knowledge is too much. All I need from you all is to share this YouTube channel, so that we may get to many more subscribers, and I'll share more content, and I promise you that you'll be better traders with this YouTube channel. Thank you very much, and it is your boy once again, Poshilajo, and I'm signing out. Yes, sir.